the Property Pod. Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Welcome to the latest episode of the Property Pod, South Africa's premier property investor podcast. My name is Suren Naidu, and on this weekly Moneyweb show, we gain insider insights from leading executives, analysts, developers, and entrepreneurs in the country's expansive property industry. On this week's podcast, we are taking a look at home ownership, in particular, the realities of buying a home versus renting. Now, we have covered this topic before, but we're taking a slightly different tack. This is in the context of the high cost of living and other challenges facing largely ordinary South Africans. Joining me on the podcast now is Nhlanhla Setomo, Head of Insurance Business at Investec Life, to discuss the topic further. A very warm welcome to the Property Pod, Nhlanhla.
Thank you. Thanks. It's good to be around and to talk about this topic, Suren.
Quite a broad question to kick off, but what is it about the emotional pull of home ownership in South Africa particularly versus financial reality? And the reason I ask this question is it perhaps a little bit got to do with South Africa's apartheid history and our people's connection with the land, as it were? People want to own their own home.
Well, with property, there are various, elements to it that really result in various feelings or various thoughts about when it comes to property for individuals. But certainly there is an emotional pull to it. That's the reality of an investment that is so tangible, like property. And if you just think about it, it's for most people that property is their home. It's an extension of who they are. It's a sense of security. It's and when it comes to security, it's a basic human need. So property just plays into a lot of those emotional elements for us as human beings and does influence at the end of the day how we think about owning or renting, because of the fact of you need to be entitled to that tangible asset. And if we think about it from the investment point of view now, if you think financially beyond just the emotions, it is one element where it also becomes a tangible investment compared to something like a unit trust or a retirement annuity. That's not really as tangible as a property would be. So it always plays into that emotional element to it. It's bricks and mortar. You can touch it. So you know where it is. When you go to work, you go away, you'll come back, you'll find it there. So it has that element to it.
So you talk about it being tangible, but, it's not from a financial side, it's an investment, but it's also a cost at the end of the day if you are paying your home loan over 20 years or whatever the term is. On that topic, what are the hidden costs? It is seen as a long-term debt, and there are risks tied to it when you take on, this sort of investment, because you have to balance it out whether from an affordability perspective as well.
Yes, and I mean that's where also the reality of proper financial planning becomes quite important for most people, especially earlier on in your career. The property investment is one solid investment that you may have in your portfolio, if not the only investment you've got in your portfolio. So there is an element of concentration and risk that it's too concentrated in one investment versus spreading it obviously in other types of investments. So that's one element. But through holistic planning, you always have to review property in a much more holistic planning. Are you saving enough for retirement rather than tying your budget to servicing a property? Are you saving enough for your children's education rather than servicing, again, the cost of your property? And those costs, for most people, it's not just the bond repayment. I know the bond repayment is a big portion of the cost of servicing a property, but there are lots of direct costs like upfront, like bond registration and transfer costs. But ongoing, you've got your levies, you've got your rates for municipalities, you've got your water and electricity, you've got the maintenance. You have to keep up that property and protect it so that it preserves and hopefully grow in value over time. And hopefully you've got appropriate insurance to protect the property and to protect yourself. If something happens to you, the family still can keep the property. And then in case of death, there are death taxes that are quite heavy when it comes to insurance, when it comes to property, like estate duties and capital gains tax. Those are all quite substantial costs that have to be considered when it comes to owning property, in light of being very, very concentrated. That it also fluctuates with the market over time. But I think holistically, for me, the key message is it has to be part of your holistic planning. It needs to be considered in that light, not in isolation.
You talking broadly speaking there, but I suppose for some people, buying a home shouldn't necessarily be an option, even though you might find that emotional connection. Would you advise South Africans who are perhaps have a tighter budgets to rather rent a home than buy, and then balance things out by investing in property, but maybe not directly, or any other investments such as equities? And I know you're not a financial planner, so it's not necessarily advice, but it's that balance that you're talking about.
Yeah, it is an old age consideration or question whether to rent or to own. For me, I just say essentially when it comes to property, you'll pay for it either way. Either you'll be paying through the bond or you'll be paying a rent. And again, it drills down to the individual person's circumstances. And also for me, I'll also say in which cycle of interest rates we are in. There are times where the interest rates are so high or they're rising where renting becomes quite optimal. And there are cycles like now when the interest rates are dropping and reducing significantly, that the bond repayments become much more affordable versus renting. And the thing in South Africa, on average, the rental costs are increasing at higher pace than inflation. So you have to consider that. But I think for some people where your budget could be quite constrained to be able to shoulder the cost of servicing a bond, plus all the direct costs I just spoke about that are ongoing every single month, renting does become quite optimal, and renting does bring and build a room in your budget to be able to save for your retirement, to be able to save for your child's future education, while you're still looking after your day-to-day living expenses that can be quite substantial for some people. So I wouldn't rule out really the option to rent, as long as it is considered within your budget appropriately, and then realizing also that if you choose the routes to rent, is that you are balancing your budget, but over time you are really not building your balance sheet. So one way or the other, there is consideration that needs to be made financially.
So I suppose renting, but if you're going to save half the money on renting versus buying, then that money that you're saving, inverted commas, is used to be invested, and it's too quick for us to spend that money. Talking about the broader residential mortgage market now, do you have some insights to share with us on where residential defaults are standing and that the factors around that, because it plays into this conversation that we're having?
Yeah, I wouldn't have the direct statistics or the numbers to say where exactly the defaults are lying. But what we know for sure is that where the financial or the economic conditions deteriorate or they worsen for households in South Africa, that's when you start the defaults. Obviously, they start follow through very, very faster than any other, I think, financial considerations or any other financial obligations people have, simply because property is one of the biggest financial responsibilities for any household. Some household, financially, it can be up to 30%. So we start seeing that, and we know in South Africa, we're coming through a very, very tight and hard economic reality. Coming out of COVID, a lot of families are still haven't recovered, let alone having proper, stable jobs. So we're seeing that really it is completely driven by the economic conditions. But for me, what overlays that is it also hits home where we know for most households, proper financial planning is not considered. And when I talk about proper financial planning, I'm talking about immediate needs that you need to cushion yourself, have immediate liquidity. If something happens, unexpected happens, a death in the family happens, sickness or illness happens, and you're off sick, you need to have something that can last a couple of months for you. And then medium-term considerations and long-term considerations like saving for that holiday, saving for that property to have a big deposit in the medium term, long-term saving for retirement and children's education. A lot of people in South Africa do not have that proper plan articulated on paper. And then we know economic times hit, and then that just goes out the window. And the first place that it hits is your property, and because it can be quite substantial in that budget.
Well, I suppose the key message there is written on paper, because they say when you write it down, you generally get it done. But on the interest rate side, I know you're not economist or property expert, as it were, but do you have any thoughts to share on interest rates and expectations going forward, considering in July we have our next interest rate decision, and there's also talk amongst both SARB and the National Treasury of potentially reducing South Africa's inflation target that could mean our interest rate might come down by a bigger margin over the medium term. And that's good for most businesses, but ordinary South Africans and homeowners as well.
I think for me, the starting position is just a realization that our inflation is at very, very low and good levels. I think for the economy, for the individuals who have to take the brunt of the high inflation rate. And I think the investor economists at the moment are still projecting a 3.5 to 3.6 levels of inflation for 2025. And at those levels, you would expect that we'll continue to see some level of moderate or reducing interest rates. And as a property owner myself, I'm not speaking here as an economist or anything like that, but as a property owner, that obviously wishing that those interest rates could drop another 25% to 50%. Probably may or may not be in July, but throughout the rest of the year, we could get another 25% to 50% reduction in interest rates. I do think that will be quite significant in homeowners, and also just economically, it will boost the economic activity a bit, because it does give the breathing room to people's budgets.
Before you go, just a little bit about yourself. I know you're not like a property expert, as it were, but yourself in the industry and your role as head of the insurance business at Investec. I didn't even know about this unit, to be frank.
Yes. I think there's two parts to myself. I do have in my own personal property portfolio. So when I speak about the direct cost, it's really from first-hand experience, and the indirect cost of dealing with the municipalities. In my portfolio, I deal with the city of Johannesburg, city of Cape Town, eThekwini municipality, and Ilangalbalele municipality in Escorts in the Midlands of KZN. All municipalities have got different systems, different issues, different problems with billing, different problems with how they run their rates, and you have to deal with local municipalities sometimes and with the district municipality for water. So those are all indirect, I think, experience or cost that you have to deal with in terms of time and efforts. And then more professional setting, I head up the life insurance division within Investec Life. And our emphasis there is to ensure that clients who do have who are homeowners and they are funding that through the bank, that is fully protected, not just as the household content or the structure of the building, but though if something happens to the client, they die or they are disabled, they don't have to have the financial burden on the family. And also, very importantly, those death taxes that I spoke about earlier on, those can be insured. So we really ensure that the clients do have exposure to such solutions.
Okay. Sinin Slanchla, thanks so much for your time on the podcast today. That was Sinin Slanchla Sutomo, the head of the insurance business at Investec Life.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories.